All right, what's going on, family? This is Paul McMillan II, and welcome to another backtesting session. So I'm going to actually do a backtesting session on a trade that I entered this morning. I had a huge fight with NAS, resulted in a couple of losses, but an end run made my money back. So I want to go through the whole process on exactly how things went with that. So let me grab my rules. Of course, the first thing I did was mark up the 15-minute time frame to the 4-hour time frame. I want to go all the way back as far as possible. So let me do that. This is as far back as price goes. Before I move forward, let me pause this recording, and we'll keep on going. Hold on. All right, I'm back. So now that I put my vertical line, I'm going to start marking up market structure based off of institutional support and resistance. And these are areas. Sorry about that, guys. Okay. Apologize for that. These are areas where the institutions are gathering a lot of liquidity to make their big moves. You can kind of see that here. They got a lot of liquidity in this support level, which made price go up to this level. You kind of see how it made price go all the way up to this level here, so on and so forth. So now I mark up this area. This is a good support area as well, because you can see that obviously price hit this support a couple of times and just dropped instantly to this next zone here. So that's a good area. So then see a good area here and then up to here. Okay. And so now the very next thing that I'm going to do is I'm going to actually mark up my zones right under these horizontal lines. So that way we can get more of an idea on how these institutions are actually interacting with these zones off of support or resistance. All right. So that's what I'm going to do here. Okay. So now that I marked up everything on the 15-minute time frame, I'm going to move on to the 30-minute time frame. All right. And so on the 30-minute time frame, I'm going to do the same exact thing. And so of course, I'm going to go all the way back to where we last marked everything up. And this is the last vertical line I put. So we can see we got to mark up these areas here. So I will zoom in, put a vertical line here. All right. And so then I will basically mark up this area. So this is the highest point here. So we call this our roof. So we're going to put green here. Okay. And then we see there's some areas marked down here. So this is a good area. And this is a good area. I'll probably maybe this is okay. And then I'll mark up my zones here. Mark up one here, one over here. So we're going to actually make this green, because it's going to represent the 30-minute time frame. All right. So now that we marked that up, we're going to go to the 1 hour. All right. And so this is the last vertical line we drew there. So now we're going to get all of this here. So I'm going to put a vertical line here. Mark structure in this area. So this is a good area. We're going to make this red. Just marking up key areas where price was really, interacting with these zones. Oops. Like that. That's probably good enough. And we draw zones here. So now we drew up our zones on the 1 hour. We're going to go to the 4 hour. And you can see we drawn up a lot of things so far. And so now I'm going to draw a zone here because this is where current price is at. I want to make this purple. What we're also going to do is probably mark maybe this area and make this purple, and that's it. Now that we marked that up, then I'm gonna go back to the 15-minute time frame. Okay. Now, so we can see that these zones, we drew these zones perfectly towards interacting, even with the 15-minute time frame. What I need to do is zoom in here. Let me pause this recording real quick. Okay, I'm back. So now I'm going to show you guys the trade that I got into with NAS100 today. Okay. What I'm going to do is just kind of bring this down to here. Make sure it fits the screen well. Okay. Yeah. So basically, the next thing I did was I identified the trend by placing a trend line. I concluded that price was overall bearish at this point, just for the simple fact because there was a lot of lower lows and lower highs. You can clearly see it, and you can clearly see it on the RSI. So that's what I did. So I'm gonna go ahead and say bearish trend line. Then the next thing I did is identify the most recent high and the most recent low. So I do that with my higher high and lower low strategy indicator. All right. And so I can see here that this is probably, the most recent high up here. Even though there was one here, but I looked at the most recent high from right here. And so this is why I put my break and retest lines, which I call my X factor lines. Basically, the reason why I do a break and retest is because I want to see a clean break and retest in order for me to get confirmation to buy or sell. So I'll put my break and retest for the sell down here and this support. Okay. And so I did that. Then the very next thing that I did was I basically turned on my institutional indicator and look for imbalance gaps. Okay. So imbalance gaps basically lets me know what imbalances that the institutions are going to have to fill to make their money back. When you analyze even kind of like what the markets kind of did with this previous move, it caused a lot of imbalance of price. Imbalance of price basically means that when the institutions put these orders in, they make a lot of money with these orders, but they also leave a lot of other orders unfilled. So in this example, they put in a buy order, which is like billions and trillions of dollars, and that's what made price go up very high. But you see, there's a lot of sell orders that went unfilled as well. So even though they made a big killing with this buy order, but they also lost a lot with a lot of these sell orders. So in order for them to make that back, they have to come back and mitigate these areas, what they did right here, which we call pullback, right? But as you can see, from this point on down, there's still a lot of, imbalance gaps they're going to have to fill. And then, not to mention, there's a lot of imbalance gaps that resulted from them driving price down very hard to mitigate this previous move. So now you got all these imbalances here. So the way I reasoned is, I try to get into the institution's head and to say to myself, okay, which imbalance gap is the closest that they may want to fill first before going to the next imbalance gap? Which is the easiest imbalance gap? Which imbalance gap is the closest to price that will make it easier for them to actually fill, make their money back quickly, so they can move on to the next imbalance gap and make their money back and then proceed forward. So I kind of concluded that even though price is overall bearish, I could see them pulling price back up at least to this point here. Because of all this imbalance that this previous price created, they may want to knock this out first before selling it down. It may be the easiest way for them to do so. So even though price is overall bearish, but I could see them pulling it back to mitigate this area. So that's what I thought, but then I knew that price eventually was going to sell. So then what I did was I start planning my risk to reward, my take profit zones. So I could see them bringing price down at least to this point to fill this area. So this could be, my second take profit. Okay. Then actually this was my first take profit, and then I think down here might have been my second, or maybe down here. I think I put my second take profit here. So then what I did was take my risk to reward tool, and I said to myself, if price breaks and retest down to here, then that's when I'm going to sell, if I get a clear break and retest. And I'm going to at least try to get profit out of this first take profit. And then if it keeps on going, then I'm going to keep on selling and stay in the trade. That's what I was thinking. But I also reasoned too as well that if price decides to buy up, then I'm going to catch that as well. So then I put my risk to reward tool here. And I said to myself, okay, if they buy, then I'm looking for price to at least go up to this imbalance gap and then decide to sell down. And then this is going to be my first take profit. And then if price happens to break through and go up to here, then this is going to be the second one. This is going to be my first rally. So then I end up setting my alarms and my risk to reward tools. And then basically I waited for the 9:30 bell. Then, of course, the next thing I did was turn on my Delorean EMA indicator. I usually use this indicator as a way to get extra confirmation. So anytime when the yellow EMA is under the red EMA, and especially if it's under the blue EMA, which is the 50 EMA moving average, then that usually is a sign of a strong trend coming or a strong candle, one of the two. You can kind of see that here. You can see that here when yellow EMA crossed up this way above the 50 EMA and caused a strong buy. You can see that a little bit with the sells and so on and so forth. Okay. So then I waited for the 9:30 bell. So I'm going to show you exactly what price did and what I did to make money. Now let me pause this recording real quick. Okay, I'm back. So then we're going to play the replay tool, and I'm going to show you guys exactly what price did, and then I'll show you my results that I got for this session this morning. So first things first is price started to actually buy up. And it kept on pushing up, hitting this area of liquidity, and then it started to buy up. And at this point, I didn't buy because I'm thinking that price is going to resist this area and it started to sell down. But it actually started to break above. It started to buy. So it hit this liquidity area and it started to buy up at this point. I'm thinking, I'm still going to wait. Next thing you know, price carries momentum, and I just went on ahead and went in for the sell. So I went in for the sell, and I actually did profit. And price ended up hitting my first take profit here. You can kind of see, let me turn off some things here. You can kind of see where price went all the way up to this point. So at this point, I'm profiting. So my first partial trade is closed. My second one is closed, I believe. And then price started going up again. Now, the mistake I made after closing my first and second partial trade was to jump in, thinking I can get some more, got too greedy. And as a result, price started retracing and going back. And you can see it started to sell. And so I suffered a loss with that. So that's why one of the things I love to teach people, and I'm still teaching myself, is don't get greedy. If you get your money, close it and stay out. Okay. Now, price started to sell. And remember, I said before that price was overall bearish, but they had to come back and mitigate some of that imbalance there. Remember, there was an imbalance there. They came back and mitigate that, and then they decided to drop it, which probably came from all of these previous moves here. Now price decides to drop, okay? So price drops heavily, and I believe I got in here, made some profit. And then when this closed, I believe price came down to this point. I closed my first trade, and then price went into a pullback. And so I waited. I was already out of the trade. I won that one. And then price decided to started coming back up. I knew that this was a pullback because this move created some imbalance gap as well. So they had to come back and at least mitigate this area. And then guess what? It dropped again. And once price broke and retest past this line, I jumped in for the sell. And I actually stayed in and made a huge profit. And then it closed down here, was still in the trade, stayed in and held it. And price just kept on going. Drops, came back up a little bit, was a wick, and then it came back up and back up again. And then drops, came back up. And this was a huge pullback, huge pullback. No, I actually take that back. I want to say that no, I take that back. I believe that price came down to this point, and that's when I took my money and ran, and I was done, period. Yeah. So price came all the way down to here, and I had my first take profit up to here, smashed it, and I was done with the market for the day. And that was it. And of course, you know, price came down a little bit more, came back, and now it's kind of shifting because it's coming back and mitigating that area, and then it dropped again. See that? And that's how I won this trade. So what I'm going to do is to show you guys the results in my phone. I'm going to show you in my photo gallery and then also in my actual MetaTrader 4. After I show you that, we'll wrap up this back testing session. Excuse me. So as you can see, this is when I went in for that buy, closed my first partial trade, and second one, got greedy and jumped in the third time, negative $130 loss. Crazy. Tried to jump in again for a buy, another loss. Then tried to jump in for the sell the first time, got banged up. Then I decided to jump in and get my money back and got those wins back. So overall, I had 1, 2, 3, 4, 5, 6, 7 wins today, and 1, 2, 3 losses. So it's not bad. So we actually did a little something. Now, I'm going to show you my MetaTrader 4. This is my live account. So I want to just let you guys know this is not a demo. And so when I go to custom, I'm going to go to June 1st. Switch this over, June 1st. Hit OK. Yep, and you can see in my live account the same exact thing I showed you in the picture. 1, 2, 3, 4. Whoops. If you guys can still see my screen. Hold on for a minute. Okay, there we go. Yeah, you can still see my screen. So let me do this. Okay. So again, 1, 2, 3, 4, 5, 6, 7 wins, 3 losses. And again, this is in my live account. All right. So this is real. So yeah, that's how I won this trade today. It was a bloody fight, but I'm learning not to be greedy. So that's one of the things I got to work on. Let me go ahead and share my main screen here. So yeah, but that's it for this backtesting session, guys. So yeah, that wraps up this backtesting session. I'll see you guys in the next one. Take care.